Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's a big 320-point gain that we have under our belt after the exit poll results came out. So the market is in full force this morning. But it's a tepid listing for Shalby Hospitals. Absolutely flat now, down about 0.5%. Ravi Bhandari, the CEO of Shalby Hospitals, joins in to talk about that. Mr. Bhandari, good morning and thanks for joining in. Earlier we had spoken to you about how your FY17 revenue growth was about 11.2%. But now that the listing is done, you can tell us what the future looks like in FY18 and 19. What kind of revenue growth can we hope to see from the company?
Yeah, good morning to you. And first of all, I would like to thank you for having me on your channel. I'd like to begin with thanking our investors who have shown immense faith in us. And today is a very proud moment for us and a historical day for the company. Talking about the financials, as we have been talking earlier, the fundamentals of the company are very strong. We have been EBITDA positive all 23 years of our operations, and I am sure we will continue a better growth in future.
No, what would you mean by better growth, Mr. Bhandari? If you can give a broad indication of, double-digit growth, would it be high teens? You will have some visibility of revenues.
So not talking directly about the revenues, I'll tell you that we have been doing the things in a different way. We have been doing the things right. We have been ensuring that we do everything right in order to ensure our best of the financial parameters, and the history tells you about the future. The history, as I said, has been very encouraging. It has been 22-23% of EBITDA margins which we have been generating over the years. If you talk about the industry scenario, it is growing at a rate of 17 to 18% CAGR, and with our kind of performance and the given history, we are more than sure of outperforming the sector.
So will you increase the number of beds in your orthopedic services from the current 750 beds that you operate with?
Yeah, so we have created a total capacity of 2,012 beds at this point of time. And just to mention, it's not about the orthopedics beds, it is the overall operational beds we are talking about, because all our hospitals, all 11 hospitals today which we have operational are multi-speciality hospitals, and gradually we keep on opening up more beds. So the capacity is already created and we keep on opening beds as the occupancy levels increase.
Okay. Any new hospitals? What is the expansion plan? So we have got 4 projects in the pipeline, and we are we have got projects coming up in Vadodara, we have got project coming up in Nasik, and we also have got 2 projects in the pipeline in Mumbai. So those are the things which are in the pipeline as of now, and future, as and when the right kind of opportunities come, we definitely would expand. We have our presence currently in the Western India. We expanded ourselves to Central India and also to north of Delhi, and intend to further expand ourselves towards the Eastern India as well as more in the north. Okay, Mr. Bhandari, thank you very much for joining us with all those details about the expansion plans of Shalby Hospitals. The stock should come up for you. The listing was a little below the market price by about 4 or 5 rupees. At the moment, 2.5 rupees below the listing price. 248, I thought, was the listing price, right? Was the offer price.
Offer price
now at 245.5. Okay, let's shift focus now to Delhi. The Parliament begins its winter session today. The government is looking to introduce 14 bills and pass 15 bills. Among the bills slotted for passage is the much talked about Financial Resolution and Deposit Insurance Bill, which has caused a lot of panic among depositors. Rituparna Bhuyan is here to give up a heads up on what to expect from the winter session of Parliament. Rituparna, good morning.
The government has listed a heavy-duty agenda for the winter session, around 14 bills for introduction as well as 15 bills for passage in the winter session. The major bill which will be, which the government has slotted for passage this time is the FRDI bill. Remember that the FRDI bill is with a parliamentary panel, and it remains to be seen if the panel submits its report during this session, and only then the government can go ahead and attempt to pass this bill in both houses of the parliament. Then, of course, course, there is this bill for, central goods and services tax compensation to states bill 2017, which the government has listed for introduction. You have some financial business also listed during the winter session, and this includes the second batch of supplementary demand for grants. Remember that there are several pending issues and expenditure items which the government needs to take care of, and it will be interesting to see what kind of items the government includes in the second batch of supplementary demand for grants. Last but not the least, there is a very important bill which the government has slotted for passage, and that includes the Citizenship Amendment Bill. There are several issues in this bill which will determine citizenship of several people in the northeast, specifically Assam, and it remains to be seen if the government is able to again take forward this very contentious bill. Net a heavy-duty agenda, and it remains to be seen if the opposition parties are able to raise several issues which they had promised to raise, including the issue of pricing of the Rafale deal. But of course, we'll know that only after 18th of December, when will we get to know the results of the Gujarat elections, and we'll have to wait and see if the opposition parties still go ahead and raise the issues which they promised that they will raise in the winter session. With that, it's back to you.
Okay, Rituparna, thanks a lot for that. Well, the market is still holding on in green, and 100 points higher on the Nifty, 300 higher on the Sensex, 315 higher on the Bank Nifty. So now you have what, 9 to 10 high. It will be interesting to see if that high is taken out in 10 to 11. But a lot of stocks are doing well now. NBFCs are beginning to participate. Just pull out the intraday chart of Indiabulls Housing Finance, and that stock, of course, is right now at the high point. Of course, the rally is being led by HDFC Bank that we've been pointing out, but in the NBFC space, now beginning to see some of the stronger stocks like the likes of Indiabulls Housing, M&M Financial actually making highs of the day, and across the board buying actually. Even IT and Pharma. Infosys is approaching its recent highs, so 1015 on Infosys as well. Bharat Forge, a lot of these stocks are at high point at this point.
And a lot of non-index large caps also, names like India Cements, etc. are coming back into action, up about 3% over there. Jet Airways is seeing a big move, so almost 3.5 to 4% on Jet Airways. And the big gainers of the year, names like PC Jewelers that have doubled this year, continue to see traction this morning, so more than 3-4% higher now on that stock. But there's no change of plans for now with the Bihar locomotive plant. That's the word coming in from the top boss of General Electric, John Flannery, who spoke exclusively to CNBC TV18. He also added that he was open to looking at government's suggestion to electrify the factory, but only over time. Flannery also was asserted that there would be no change in his company's commitment towards India, even as the company embarks on a global restructuring drive. Here's a slice of that exclusive conversation.
This has been a story that GE has bet on for decades now. You were here in India between 2009 and 2013. A lot has changed since then. What's the current status as far as GE's commitment to India is concerned?
Well, no change in commitment. I'd say we've only amplified since I've been here. The business has grown. When I first got here, Shireen, we had, I think, 700 or 800 million in sales. We're close to 5 billion. So our business has grown dramatically in healthcare, in aviation, in power, our research center, our supply chain. So we're doing more of everything that we were doing when I was here. And I'd say the macro mood, I met with government officials in Delhi yesterday, a lot of customers. The macro mood around the government and everything and what's going on in the country is really strong. So we're all systems go.
So almost at 5 billion, because these targets have been elusive for GE in India.
Yeah, I might have said that to you a while ago. Now the current management team's been able to do it.
So what's the next target then? What's the target that you're aiming for?
So we were there yesterday. I said 10, guys. How do we get to 10?
10 by when? 10 by when?
Well, that's they owe me that answer right now. So,
okay. But let me ask
not soon enough.
Let me ask you about where things stand as far as the diesel locomotive business is concerned in India. There's been a lot of conversation and a lot of back and forth. The government says that we're going forward, but we're still seeking clarity on what that means exactly.
Listen, we're moving forward. We have obviously a contract in place. We're executing under the contract. We're on or ahead of schedule, and so I'd say from our perspective,
no change?
No change, absolutely.
Because they're talking about electrification of the Indian railways over the next 5 years. So
over time they'll do that for sure, and I understand what they're talking about. We have an arrangement for diesel. There's going to be a place for diesel, so we're just executing under our contract.
So the current order stands as is?
Yes, correct.
All right, that's a high profile guest who's on record saying that he would like an India, like a world full of Indians. Okay, here's another important, conversation that we had. The government, if you remember, yesterday evening, formed a high-level group of only Indian auto companies to incentivize more value creation from India. Tata Motors, Ashok Leyland, M&M, Hero Moto and Force Motors are represented on this panel. We learned that the high-level group has discussed bringing back curbs on royalty payments and also to give higher incentives for R&D to Indian companies as it seeks to position India alongside Germany, USA, Japan and South Korea as a design and engineering hub for automobiles. The move is to create an Indian-only panel of OEMs, has led many OEMs who have questioned why only a handful of companies are deciding our policy matters. Here is a conversation that we had with Vinod Dasari of Ashok Leyland on the issue.
For foreign OEMs, I don't think there is any country, this is my belief, I don't think there is any country in the world where there is no cap on royalty. That means you can send whatever amount outside. If that is the case, then what is the incentive for foreign OEMs to do engineering in India? They should have some sort of, I'm not saying become ruthless at it or go after foreign multinational. I'm not suggesting that at all. There should be, when we set global benchmarks on technology and emission and regulations, we should also follow global norms on royalty and transfer prices and so on.
Okay, so that's the Make in India push that's expected from this panel. Okay, NBFCs are in focus. The rural market is seeing an uptick in terms of growth. The other trigger, of course, is the hardening of bond yields, which can impact the cost of borrowing for these companies. Ramesh Iyer, Vice Chairman and Managing Director of M&M Financial Services, joins us now. Good morning, Ramesh. Thank you very much for joining us.
Morning.
Well, first up, how's the rural demand shaping up? You know, we got some negative cues yesterday from some of the automakers, auto retailers, who said that December has literally been thanda in more sense than one. But are you seeing an uptick in loan demand?
So for us, we've definitely seen an uptake. One, of course, we are present across the country, that gives us that benefit, and of course the multi-product approach. And nowhere we have a 50-60% kind of a market share for us to start feeling is that something going down. So when you have a 30% market share, even if the overall volumes are a little down, your market share tries to slightly improve and you get the benefit. So from a financials perspective, I think we are seeing demand for a loan product, and the volumes are holding up. In fact, for us, after 2 years, I would think the last 2-3 quarters have continuously seen benefit of growth, and we are very, very buoyant.
Oh, Mr. Iyer, good morning. That's interesting, and I think that would be music to the ears of your shareholders. So what kind of growth have you seen, if you could give us some numbers?
No, so if you kind of look at, let's take April, June. June was a very big month with 20% plus growth. Now that was at the back possibly of GST likely to come in July. That was the discussion then, and therefore there was volumes picking up. But in that quarter itself, on an overall, we had a growth of 8-10%. Then we saw, July going a little slow, August getting slow, but September again was a very big month with 21+% growth at the back of Dussehra. So I am looking at it as, normally if you have festival in 2 months between, let's say, October, November, it's the benefit that comes to the third quarter. But this time we had one good month in second quarter. We had Diwali in October. We had a good month in terms of overall volume benefit of what happened in the rural market. We got benefited by that. And the monsoons have been good, so therefore the rural cash flow will hold up for us to see even going forward things look good. So I would generally say from a 5-6% growth what we saw the last year, we are already averaging 8-10% plus growth, and normally the second half is the best half for rural.
Oh, that's very good to hear. Mr. Iyer, two pockets that you finance, the commercial vehicle space and the road construction equipment space. We are hearing from the sector bigwigs that there is a significant amount of improvement that we've seen here over the last few months. Your own view on what the growth rates could be in these two pockets?
So one is, of course, we have a small base as far as commercial vehicle and construction equipments are concerned, and therefore for us it could be a little more aggressive growth, so I'm not really focusing on the growth rates. But definitely the sentiments are very positive. You know, my team was there in Bangalore where the construction equipment exhibitions are happening and things like that, and they have come back very, very energetic to say everyone is talking of big growth in the next couple of years, etc. So we do believe in that same, and current purchase of commercial vehicle undoubtedly are definitely fleet operator purchases, and that's not our segment. But immediately following that, we will see mid-sized operators buy vehicle, 5-10 vehicle owners start buying the vehicle, and we do see some of that already happening. And clearly we see that would be one of our growth engine as far as the next 2 years are concerned.
Okay. Ramesh, you know, your NPLs defaults for 120 days past due was 10.3%. It had come down. But your NPAs 90 days past was at 12.5. Any improvement in that? Is it declining?
So, you know, we moved to 90 days in September was itself a good indicator that we do see collections improving going forward. Otherwise, we had time to take it only in March. And last 3 quarters we have seen, and normally the first and second quarter are actually a quarter where we see increasing NPLs that we have historically seen. So if you were to adjust our book for 120 days, as you said, even in the first 2 quarters it's seen a decline. And overall collection efficiencies have been good. So again, sentiments are very positive. I think the average yield is good, average support price so far announced is good. So I would think definitely the rural growth, rural cash flows are showing improvements.
Okay, how much will cost of money increase now that bond yields have gone up? I mean, 2018, what will be the cost of money vis-a-vis 2017?
So I think 2 ways to look at it. One, of course, the bond rates were lower, it has slightly gone up. But even the increased rate is lower than our average cost of money, because we do have some high cost funds from the past. So clearly our average cost would be somewhere in the range of 8.15 kind of a thing, while the marginal borrowings could be even lower than that. So definitely it is little increase over what we borrowed maybe in the last 6 months, but it's still lower than the average cost of funds we have. So therefore, definitely one would see a net interest margin improvement even at this bond rate.
Okay, that was going to be my next question. What can you guide in terms of spreads for the second half or NIMs?
So I won't put a number, but our average yield, given that we are also into pre-owned vehicle and tractors are showing good growth for us, so our average yield would hold up to anywhere between 16+%. And we are a AAA rated company, and as far as our borrowing is concerned, as I just said, our average cost of funds would be somewhere between 8.25. And whatever improvement to that can happen is going to be the benefit. But our net interest margins are always an outcome of, you know, what is the income reversal that we do from the NPL account. And therefore, if the NPA also is likely to come down or at least stay stable going forward, no increase in NPA, one would definitely see overall improvements in all round.
Okay, Ramesh Iyer, pleasure speaking with you. Thank you very much for joining us. And if we don't meet till the start of the year, then have a great 2018 as well.
Same to you too and your team. Thank you so much.
Okay, thanks so much for that. Well, that's some positive statements coming in. So that's quite heartening to hear that things are picking up as far as the rural market is concerned. With that, it is a wrap on Bazaar, and things have stabilized as far as our own markets are concerned as well.
Yes, but you know what, just dipped a bit. Will be interesting to see. You know, as I said, the test for the market would be the second hour. First hour, you have made a high. I think that high needs to be crossed between 10 to 11 for us to have a trend day. Let's make no mistake about that. Otherwise, you know, this market will be at risk of seeing intraday profit taking as well, because, you know, you went into the event with longs.